Hello, creators. I've got a very special episode for you. If you are a founder and you're raising capital, you're pitching to VCs, I got none less than Adam Benayoun from Collider VC with us today. And he's going to tell you all about what VCs are looking for, what are their check boxes that they're looking for founders that are on the Web3 space. And we go everything from their story and their hardships all the way to what his vision is and what he's looking at right now for investments. So if you're excited for this episode, stay until the end and let's get it.
You're listening to the Web3 Creators Podcast, where we speak to the brightest minds and builders in crypto, DeFi, NFTs, and the metaverse. Our goal is to give you the absolute best tools for building a thriving business in the Web3 space. Now, here's your host, Hernan Arber. Let's start creating.
Creators, welcome back to a very special episode of the Web3 Creators Podcast. I am with a very special friend of mine and a very key player in the Web3 industry here in Israel. He's none less than Adam Benayoun, the co-founder and founding partner of Collider Ventures. And he's very involved also with the Web3 space. Collider Ventures is not just a regular VC here in Israel. They put up events, they network with the people. They really are part of the entrepreneurial community here in Israel. I always make sure to remark that because they are a very, very, very important player here with us. Has given me personal feedback and how to really improve my own entrepreneurial journey. So I appreciate that a lot. And with that said, Adam, welcome. How are you doing?
Thank you. I'm good and glad to be here. Glad that you invited.
Yes, of course. It's an honor. It's an honor of me to have you here in the podcast. Let's start by a quick intro. Let the audience know who they're meeting.
All right, cool. Well, my name is Adam, and as you said, I'm one of the founding partner of Collider. Collider is a fund that invests natively in crypto, meaning that we only do crypto. We only do Web3, blockchain, whatever you call that. We do nothing else. We're based out of Tel Aviv, but we also have people around the world. Most of our investment are focused in Israel because we believe the Israeli ecosystem is one of the top ecosystems in the world. We will also make investment outside of Israel. We can double click on that later on if you want to speak about that. And that's pretty much it. I mean, what you said earlier is very important to us. We're part of the community. We're a stakeholder in the community. Meaning that we're not just an investor in investing in companies, we're also producing, a conference once a year called Building Blocks. Also one of the founding board member of the Web3 forum, meaning that we created a lobby together with Starkware, Fablocks, and a bunch of other companies in order to talk to the regulator and the policymaker to create a regulatory framework in Israel. And we're doing a lot of stuff behind the scene just because, we have two hats. The first hat is to make money to our LPs and invest in best companies, but the second hat is to really make Israel great again in crypto. I would say great because I think Israel is great, but Israel could be much better, and we believe that Israel could become top 2 ecosystem in the world in terms of in cryptography.
Well, introduction wise, top 3. What do you think are the top 3 right now?
It's a very, very hard question because it's very subjective. I would say the first one is the states, even though regulatory framework was not there, and only now with Trump and the new administration, things are going to get crazy there. But it's still very, very, very strong. I mean, a lot of cryptography, a lot of people coming out of the states, and a lot of innovation there. And I think Israel is probably the top 5. The rest is a moving target. I mean, I don't want to pick any geo and say, oh, that's one is number 2 or number 3. I can definitely say that number 1 is the US. I think that they will keep being number 1 because the US is just the biggest capital market in the world. You cannot take that from them. But they're also very, very good at innovating, and they have a lot of research centers, a lot of people there who are innovating on many fronts. If it's a Valley, if it's in New York and other places. And I think Israel could become number 2, per capita. We've done that with the regular tech industry. We've created, enormous value in the world, a lot of unicorns, a lot of innovation. So we started as a startup nation. We ended up, being some sort of a scale-up nation. So I think we can kind of take that and duplicate that basically for crypto. In terms of my personal bio, because you asked me to introduce myself, but, talking about Israel all the time. So I've been an entrepreneur for about 15 years. I've started a couple of companies. I think I've witnessed, Web 1 or the birth of the internet in 1991 and having had internet access from 1993, lurking in IRC and GeoCities and, seeing every single company that you talk in Web 1, starting. I've been an entrepreneur in Web 2 for about 15 years. And then in 2015, I sold the company and I joined 500 Startup, which is a seed fund with an accelerator based out of San Francisco.
Was this the same one company you worked on for like 15 years until the acquisition?
No, I started several companies, failed a lot, and then, became a VC in Web 2 for about 3.5 years, and then went in the rabbit hole. I can double click on that in a second. But the thing is, I usually tell, entrepreneur that I've been an entrepreneur myself, and I know how hard it is to start a company and to raise money. And, I failed raising money. I succeeded raising money. Closed company. I did basically the whole range, and I know, what a roller coaster it is to start a company. I think that today we run Collider as a startup in a way, but our job is not as hard as an entrepreneur. So we have immense respect for entrepreneurs and innovators who just get started. And so one of the things that I usually tell my team here, but any other investor, I think the most important trait of an investor is to have empathy to the entrepreneur, to have respect and to basically respect the craft of starting a company. And so I think, anyone who has started a company in the past and became an investor, it's really great. There's a lot of people who have not started a company but became investor and they became amazing investor. I can name a few, like Fred Wilson from USV and other. And so it's not it's not like a prerequisite to start a company, but, it obviously can help if you've been through the same challenges that you're going through right now, yourself.
Mm-hmm.
Yeah, on the crypto side, I've been, I would say, exposed to Bitcoin around 2012. When a friend of mine told me about Bitcoin, I started mining a bit, exchanged Bitcoin a bit with other people, but I didn't really, I did not really see what, Bitcoin could become down the road. I thought it was a nice experiment. I was also very focused on building my own company. When I do something, I'm like all in that thing that I do.
What was the company at the time?
So the company at the time was Beanpress. It was a marketplace for commercial open source. And so I was in the States for about 4 years. So I've been, back and forth between the state, San Francisco and Tel Aviv. And so, opened an account of Coinbase back then. I started looking at Bitcoin, but, frankly, I thought that was a nice experiment, but nothing more than that. And only in 2016, when I was at 500 Startup, I was an investor, and I started putting together my investment thesis because I needed to have one, right? And, I'm coming from the open source industry, with Beanpress and the developer tools industry. And I read one day an article about the DAO, the first DAO on Ethereum, trying to create a VC on the blockchain, and obviously it got hacked at some point. And, we know what happened after that. But it really, really, really made sense to me that all the stuff that happened behind the scene in a VC and, all the back office and the on-chain activity and everything needed to be on-chain, and it made sense to me. And so I was like, that's interesting. But the most interesting thing was that I did hear about Ethereum in 2014, but I didn't really pay attention. But then I started connecting the dot back to Bitcoin, and I was like, oh, that's basically crypto, right? And I was very surprised to see that there was a big industry that basically got birthed from 2014, I would say, when Ethereum started and then really got traction at some point in 2015 and 16, and then 17, we know what happened with the ICO boom, etc. And so I was very surprised there was like a very parallel world where, I was in Web2, I was investing, very active, going through Israel. I would meet, hundreds of entrepreneurs a month and get pitched, from all different angles. But I never met a lot of crypto. I mean, I maybe only met one, and I didn't really figure out. And I think that was only after I started reading about, the DAO. And then I was like, that's interesting. Let's go in and read. And so I started reading on Reddit, and I started reading the white paper. And then I went back and I read the white paper of Bitcoin, white paper, and then things started to make sense to me, especially because I witnessed Web 1 and I saw the transition from Web 1 to Web 2, how everything became very centralized. Mind you, I saw what happened to Zynga when they were on, Facebook. I saw what happened on Twitter, where, people were building Twitter clients, and one day they just closed the API. And I saw a lot of stuff that happened in the background as a VC. And I was like, okay, that shouldn't be like that. And so it really made sense to me. And I went out and I basically started meeting with a lot of entrepreneurs who were building in the space. And I remember I met with Jan Herzog from Banker, and I met with the founder of Status, and I met with a lot of founders who were building the space, trying to understand, why are you doing this? What is your vision? Why? And the more I was talking to them, the more I was fascinated. And the more I was starting, investing myself, experimenting and doing stuff. I remember I went on the forum, and there was a project called District 0x, DNT. Okay. And I made a proposal on GitHub. I told, wrote a very long post of what I think should be one of the products they should be building, etc. And they accepted that. And then after a week, I got an airdrop of 7,500 DNT, which were worth $15,000. I was like, I don't remember exactly, but it was a lot of money back then. It was like, oh my God, I just wrote a post. Nothing more than that. I mean, I literally gave away some of my knowledge, which I do every day. And these guys rewarded me with token, which I actually financial token, not just utility token. I can actually, change them and make money. And then it dawned to me that crypto is super interesting because it unlocked and opened up something very big that could take maybe 2 or 3 decades to accomplish. But the financial incentive, and sometimes what happens at the beginning, is a good hook for a lot of people to get into this world. And so I usually joke with people and tell them, you come for the money, you stay for the tech, or you stay for the vision. And this is really playing into financial nihilism, and the fact that a lot of people in this world right now, the younger generation, are looking to make money quicker because they understand that they're not going to be able to buy a house, and they're not going to be able to get some sort of financial independence like their parents and their grandfather, and they understand that the world is rigged against them. And so they basically turn to, GameStop and turn to a lot of stuff, trading stocks, trying to do stuff. And crypto is also very appealing to them. Not that I like the speculation side of this, but I'm just saying this is a good way sometimes to really attract people into this world. The feeling that you could do something, you could contribute, and you could get rewarded for it is huge. And so one thing that I did is basically I went to 500 Startup and told them, look, I'm investing on your behalf. There's a new world called crypto. I want to invest in it. Can we invest at the fund? They made some research and they came back to say, look, we cannot do that because we're a fund, and the LPA, which is basically the agreement between the investor in the fund and the fund itself, state that we cannot invest in assets. We can only invest in equities, and we have some limits, etc. But I was smart enough to tell them, well, you know what? If you cannot invest, and I cannot do that on your behalf, how about I get a waiver and I invest myself into different companies, smaller amount, and I get professional, I get some knowledge, and then at some point when we start a new fund and we want to get into this world, I will be embedded into this ecosystem and I can lead this for you. And they said, yeah, sure, no problem. As long as you don't invest in equities and you don't invest in company that we invested that launch a token or something that could, be a conflict of interest, we have no problem that you do whatever you have to do. And I really started doing smaller investment, 20K here, 15K there, 5K. I invested in, Enigma and Zilliqa and Chainlink and a bunch of other companies. I was trying to be very involved into those investments. Once I invested, I was involved in the community. I talked to the founders. I flew several times because I'm a VC. I'm like, okay, I'm going to invest, but I want to be involved. I want to help the entrepreneur and the people. And then so I started like being very involved. And at some point, I found myself being more involved in Web3 than in Web2. And so I came back to Fabon and said, well, maybe it's time for me to leave and start my own fund. And so in 2018, I left 500. 3 months after I left, we did the first close and started Collider.
What was the first big, either like big win in those small investments you started making? Like it was a light bulb moment that regardless of token you might have invested and went to the moon, as we say, was it like, I think regardless, this is where the future is going. I want to dedicate myself only to like Web3 investing.
Yeah. So I am really moved because I was a VC, but I was an entrepreneur for about 15 years. I was really moved by building something big. Like I'm attracted to big visions. I'm attracted to a big narrative. It has to be dramatic. I'm an entrepreneur, so it has to be like super big. And so I did make money by investing in tokens. I usually hold them way too long because I don't like to trade, but I made enough money and I did really well. Besides that, I also did well for a lot of other people who co-invested with me. Because I was an investor, I would go and do TD and I would talk to the founders and I would write a deal memo and I would basically tell my friends, okay, I'm going to invest here certain amount. I would talk to the founders and get, some sort of allocation, or if it's a TG, I would tell my friends to get in because I think 1, 2, 3, 4, 5. Never really did like SPVs or stuff like that. Just, as a friendly advice. I was part of a big group that basically made a lot of investment together with me. And in some cases, I brought investment that made sense. Some of the people who invested with made a lot of money. And, when I stopped doing what I was doing as an angel investor because I wanted to do this, much bigger, and I wanted to have like a larger impact, it made sense to me that way to start a fund and not keep angel investing. Even though by angel investing, I think I would have made way more money in the short term. But I really wanted to institutionalize what I was doing because I wanted to have the ability to write a larger check. I wanted to have the ability to really get on a journey with the founders for a couple of years and not just flip tokens, which is what most people were doing in 2017. And I really, really disliked most of the hedge funds mentality that there was in 2017 of just, buying a token, flipping it, and then making more money. And people were doing, I did 40x, I did 50x, 70x. I said, wow, great. You made money short term. You probably made enough money to retire, maybe. Now is the time for you to stop and really contributing back to the industry because you really need to do something, not for the money or for the greed, but because you want to make an impact on the world. And for me, that was it. I mean, I really wanted to take money from other people and create a brand and make, certain amount of investment. The fact that we started a closed-ended fund and not an open-ended fund, meaning it's a VC fund that is locked for 8 years, meaning that there's no liquidity for our investor, was a really big ask for my investor because everyone could just invest directly and give money to hedge funds. But I told them, look, there's going to be a point in the future where things will start to standardize and you're not going to be able to make the same amount of money or the same investment you're making in 2017. So 2017 was a jungle, whatever. So yeah, even today, there are some people who have better access they have as angel investor, whatever. As a market, most of the retail who had great access in 2017 don't have great access anymore and are not really part of the journey and are sometimes only care about the token value itself, or they don't do enough TD and sometimes they invest in the wrong places or whatever. Not that I'm saying I'm a better investor. I'm just thinking that when I invest in a founder and I tell them, go and build your company in a sustainable way, take a couple of years to build a product with product market fit, don't launch a token yet. Once you have product market fit, once you have a product and once you have a community around you, then you can start thinking about a token because launching a token is like an IPO, right? Once you IPO, it's very hard to pivot. It's very hard to change your product. It's very hard to do a lot of stuff. You have the requirement as a public company or as a public token company, you need to talk to your investor, which are not 5 people or 5 VC. It's suddenly 5,000 people.
And the token is a product in and of itself. So if you don't have a product that is actually sustaining that, or you don't have a product built that can be at least in the improvement and or has product market fit, then basically all the product that you're building is that token, which is what we see in meme coins, right? Which is just the token is the product.
Yeah, I have no problem with the token being a product. I think meme coin are okay. I mean, I'm not too drawn to meme coin, but I do believe that meme coin is part of the culture, the same as, buying a monkey or, or an NFT, or even buying a Picasso and putting it on on your wall. It's a status. It's basically, it's projecting something to the community, or projecting something to people. And so it makes sense. I do think that there's a lot of companies who are launching a token way too early. And the product is not the token itself or something that they're building behind the token, but it's actually the marketing and the empty promises that they're doing, or they don't have anything. And then the problem with that is that the token is usually a security. When people invest in the token, there's no utility, no decentralization, no community, nothing. And the only thing is basically there's an expectation to make profit. And there's one single person or a couple of people who can make a decision. It's controlled by several people, not by the community. Then it's a security. Then usually as a founder, you cannot sell that security to a lot of people. And usually people are not compliant with security laws or regulation in many countries. And so they end up having a problem if they become too big with the regulator.
And what is the biggest issue there? Is it centralization, or the fact that there are securities? And why would having them being securities become like problematic, or what is the core issue there?
So I think we need to change the regulation, because I do believe we need to allow people to participate even in the sale of security. I think that the fact that I can invest in as an accredited investor in any startup I want, I'm not talking even about Web3, but I can invest in any startup I want, and et cetera, and other cannot, might actually, the fact that we're trying to protect those people, we're basically denying them the ability to create wealth. The problem with that is that, one, they don't have the knowledge, they don't have the sophistication, something to do the right due diligence, and they don't have the means to actually make an investment or the knowledge to do something right. If your net worth is $500,000 and you invest 100K into one single equity, okay, that has a lot of risk, like a startup or a token, sizing is not right. You should not be investing 20% of your net worth into this. You should maybe invest 1 or 2%. And so we started seeing, last couple of years, some changes in regulation to allow crowdfunding and the ability to sell, security. But then you need to be able to really write like a paper that explains what are the risks and what you're going to do and what's the roadmap, etc. It's not like an IPO, but you need to explain to investor why you're raising money and what they're buying. Usually they're just buying, a security, etc. So I think the regulation needs to change and need to adapt to this new world, and to the fact that there's a new token that is not an asset and not a security. It's not a utility and not a security. It's basically both, right? Because one hand, it allows you to use the network in some places, but it also allows you to make an impact on the governance by voting, etc. And it also will allow you to get a dividend from the network. And so it's a new asset. We need to basically define new laws for this new asset and allow people to participate. But we also need to make sure that they will participate in a way that doesn't harm them, because we don't want consumer or retail to basically get harmed in that way. Okay, so that's one thing. I do think that because there are no regulation, and it's a place where, because a lot of people are expecting to make quick profit because, they've seen their friend doing 100x on Chainlink or on Solana or other places, there's also an opening for a lot of people who are not really builders or innovators to come in and do things and basically, scam people and be and be a fraudster, etc. So I think that we need to find the right balance, and we need to make sure that we can allow innovation to prosper and foster innovation in a way. And on the other end, we need to make sure that retail and people can participate in a way. In terms of security, it's bad to sell security. We need to understand that when you sell security, you're basically selling an expectation to make a profit. It's not a utility, nothing else. When a company comes to me and try to raise money, usually they don't have a product or they have like an MVP. So I'm basically, when I'm investing, I'm taking a lot of risk and I'm helping them and doing a lot of stuff, but there's no utility. There's no decentralization. And it's great because there's this thing called progressive decentralization, which was coined by someone, I think JC Walden was at A16Z. I don't remember exactly the name, and then went and started Valiant. And the way he basically pitched this is, at the beginning, it's just a startup. It's a couple of founders who are just starting, and they're trying to figure out what's the right product to build. They're taking a lot of risk, and they should be raising money from angel investor and from sophisticated VC. Okay. And then as they progress, they create this community and they create the product and they create decentralization to a point where there's enough utility, there's a product, there's enough decentralization. They get to a point where, from a regulatory standpoint, they could be compliant and be a utility and not a security. And at that point, they're allowed to launch a token, and that token could be in the hands of thousands of people. And why is it important that not one person or 5 person collude together in order to make decision against the community? Because look at Bitcoin and Ethereum. The whole prospect of Web3 is to create ownership and is to create decentralization in order for people to be safe and know exactly what they're getting. You know, you see a smart contract that is on Ethereum, you know that no matter what, that smart contract cannot change and there won't be any collusion. And so you can put money in and, you know, you can hold 10 millions, 100 millions of dollars in Ether because, you know, no one will be able to forfeit or take that asset from you. In small startup, there's one person making a decision. They can pass a governance and then change completely the rules and then, you know, say, hey, we're going to take 50% fees from every transaction. Or we're going to make sure that only certain addresses get fees or doing a lot of stuff. And so you don't want to get in a place where only a very small amount of people can make those decisions. You want to get, if you create a decentralized network, you want to have that security that only the community can change. So up until a certain point, you want to be lean. You want to be progressing very fast. You want to be making centralized decision because you want to create a startup or a product that makes sense and have product market fit. And you want to be able to have a quick feedback loop and not go to the community and say, hey, can we change that? Can we change that? And at some point, when you have product market fit and you start building a community around yourself, at some point you can start decentralizing, knowing that what you've built will not change dramatically. And now you can, you know, enter the phase of being a little bit more stable and have the community, you know, impact your decision and making some type of a decision against what you think should be right. And in between, there are a range, right? There are some things like Ethereum and Bitcoin are extremely decentralized, even though you could say that Ethereum is not as decentralized because Vitalik and others in the Ethereum Foundation can have an impact on decision as opposed to Bitcoin. Even Bitcoin, I would say that the core developer do have some, you know, some impact on how we make decision in Bitcoin, but Bitcoin doesn't change a lot. And Ethereum is, you know, as well. But, you know, do want to know exactly what to expect. And I think that transparency and knowing that there are, you know, certain governance and, you know, certain balance between the two is pretty important. So, and again, it's a new industry. It's a new asset. We're basically literally building and making up the rules as we progress. And we also need the regulator to agree with us because you cannot build a shadow banking in a shadow world that is not connected to the real world, because I think that the path to becoming completely on chain and, you know, my vision 2 or 3 decades from now is that everything will be on chain, real world asset, every single thing will be on chain, including your reputation, including your GitHub profile, including your podcast that you're doing right now. And that may actually give you some reputation. So you will be able to use that to swap with something else or to maybe put as a collateral or, other stuff. And in order for that to happen, you basically need to bring everything on chain.
Yeah.
And it doesn't have to be on Ethereum or in a decentralized network, but everything will need to be interoperable with each other to create this big economy that is completely digital. That's why I think the Intel would come in 3 decades.
So you'd say, as a builder and a creator in this space, it's okay to start centralized, start nimble, act fast, fail quickly, make quick decisions that are not, you don't require consensus with a large with a large network. And then as you grow, you want the stability, the resilience, right, and the transparency, basically, that building on chain gives you.
If you're going to build a decentralized network or a decentralized project, whatever, with that, yes, you will need to have a bigger community that will have an impact on your decision making and not be the dictator that can make any decision, even against the community. By the way, if you're truly open source, it doesn't matter, because if you make a decision against the community and the community doesn't like that, they'll just fold your project and they will go out somewhere else. In most of these networks, is the community and not the product itself. It's super important to understand. There's not product market fit anymore. I call that community market fit. The community is a product. And if they're trading on Uniswap and everything is on Uniswap, then great. If Uniswap tomorrow does something to alienate most of its user and then decide to take everything to another place, we saw SushiSwap, back then, launching a token and basically forcing Uniswap into also launching a token. They did a vampire attack. A lot of the community moved to SushiSwap, a lot of community. But at the end of the day, you also need to build a great product for the community to come back to you, because we really need to build better product, better user experience, better things in Web3, because right now everything is kind of shit.
Yes.
Or, it's becoming better today, but it's still
it's getting there.
Yeah, it's getting there, but it's taking a very long time to my liking.
Creators, I'm taking a minute to tell you all about Cora Finance. Now, as you've been following, I am helping the Cora team with their pre-sale, which is now open. And the Cora Finance team has built an amazing AI agent that'll help you with all your DeFi needs. And it's going to allow you to optimize your crypto portfolio. And it's going to allow a lot of new people in, because instead of managing passwords and handling cross-chain bridges and liquidity pools and staking and how to maximize the APY on their holdings, this AI agent Cora is going to handle all of it for them. And for you, if you want to use the app, it's also on beta. So, join the beta testing team. And obviously, if you want to consider joining in and participating in the pre-sale, I'm going to leave a link down below that helps both of us, because I get obviously a bonus and you get 25% discount on whatever amount of carry tokens you want to purchase. So obviously this is not financial advice, but take a look at the project. It's an amazing team with an amazing technology in the hottest narrative, which is AI agents blending with DeFi. So check it out, link below. Bye. Back to the show. Speaking about evolution and the beginnings, when we met, Adam, was back in 2017, 2018 maybe. Back then I was founding EOS Israel. You were in a small office right next to Sarona in a house, actually. It was very nice. But it was the early beginnings of Collider. You were with Ofer Rotem, and I pitched you on some ideas for the EOS ecosystem. That was very hot back then. Was the new L1 with scalable, true scalability, etc. And I remember back then, that was only the beginning of Collider. You were founding these things. So could you drive me a bit of what stage were you at back then? Were you starting to raise capital? How was your process in forming a thesis with forming your partners at Collider? And what was kind of the challenging times that Collider has need to navigate through, other than the bear markets that we all founders in Web3 know what that's like?
Yeah. So when we met, I guess we were probably just getting started, and so we did some investment, but we did not have a formal structure yet. And so some of the investment we made, and they were pretty big investment were basically investment that we made from our own personal money with the expectation that we would roll them into the fund once we had that closed. It's called warehouse investment. It's when you know you're going to start a fund within the year, but you need to get going and you need to show your LPs or your prospective LP that you're going to raise from, that you already have the network and the products, and then maybe even you get a couple of wins, you invest in the company and then they raise more money, and then you can tell the person who's going to invest, look, you're investing in a fund that already has 5 portfolio company, and some of the portfolio company already raised more money, and so the portfolio is valued at 10 million, but you get at 8 million or whatever. So those are the things that you can do, when you do a closed-ended fund, because it's really closed and you only raise money once and then you close the fund and then you start deploying, as opposed to a hedge fund where it's constantly open and people can invest and redeem all the time. And so the valuation is basically the NAV, is basically the valuation always, kind of change. Hedge fund are more adept for public markets. So you invest in stocks and they're completely liquid. I thought that for this world, it would be better to just start a closed-ended fund. It took us a lot of time to raise money because while we had a lot of commitment, the bear market started. We used to joke here at Collider that whenever we started raising a new fund, the bear market started. So we start really at the top of the peak, and then we get into the bear market and we actually close during the bear market. So first time we had.
So guys, you've heard it first. Collider starting a new fund means a top signal. So write it down.
Yeah. So the first time we did raise, we had commitments for $30-40 million. And when we actually closed the fund, because we needed to go and do some research about regulation and stuff like that, we only closed a bit less than 10 million. Because, and again, most of our LPs invested. It's just they had to downsize significantly what they were going to put, because they were feeling poorer than they were 6 months ago when they gave us the commitment. The second time when we raised our fund, we ended up raising $60 million. We wanted to raise about 80 to 100, and we had a lot of commitment also. But then 3 Arrow Capital happened, and then Celsius happened, and then Luna happened, and then FTX happened. And the more we basically raised almost everything in the first close. So we raised about 50 and something million in 2 months. And then it took us another 2 years to maybe add another couple of millions to that, because it was very hard. And most people basically look at us and say, I'd love to invest, but, I really think that crypto is going nowhere. So I'll just wait on the sideline. And so those cycles are really hard, because you really, there's this phrase that says you cannot time the market, right?
Right.
But you really need to time the market when you raise a fund in a way, because, there's a lot of, I would say there's a lot of emotions in investing in a fund. The more you raise money from any sort of individual and family offices, when you go to the institutional investor, pension fund and others, which doesn't really happen a lot in Israel. I mean, we've raised money in the last one from one pension fund, but from the Nostro side and from a public company and 2 pretty big and prominent family offices. So only now we start to feel what it is to raise money from those big institutions. We see the world in decades and not just in years. And for them, when there's a bear market, they actually think very differently from most crypto investors. They say, oh, now is the time to deploy money. Great. The thing is, the price is low. It's cheap. I should be buying. And so for them, actually right now, what's happening, it's not great, because they're basically saying, okay, everything is going up. And so we're basically, maybe you should be slowing down your pace of investment, and because they understand that you should be buying in a bear market and selling in a bull market. So I guess the more we made progress, we wanted to really focus on the right kind of investor. We invested in us because we wanted to find people who would not just invest in one fund, but would invest in 3 or 4 or 5 funds and be our partners for 2 or 3 decades. And you can only ask that from family offices, pretty big one. And, the one that basically made money in the last couple of decades. And so they basically look as a family into generational wealth over a couple of decades and not just 5 years or something. And then obviously pension fund will make decision to invest. And once they invest, then they usually keep investing in 2 or 3 funds. And then they reassess if that was a good decision or not. So that was where we were. And where we're at today is basically we're in a place where we have a good mix of institutions and non-institutional investor, but we still need to have more institutional, and hopefully with what's happening now with Trump in the US and the US opening up to crypto and things, moving favorably into a place where there's going to be more regulation in places like the US, which is the biggest capital market in the world. I believe that the notion of having a VC fund in Israel will be something that a lot more institutions will be open to. Still, not sure if they will be investing because crypto is still very risky for them. They need to get educated. Most people are not incentivized to take too much risk, especially if the risk is reputational. If something happened like FTX, and then they could get fired or something. In terms of how we see the world, so our thesis kind of evolved. We started with this very broad notion that Israel might be interesting, and he basically had during the bear market of 2018 and 2019 to make the decision of investing more outside of Israel because there were not a lot of projects here. And so we ended up investing in great projects, but they were not Israeli. And then when we started raising the second fund, we started seeing more deal flow. Then we started double clicking on the Israeli thesis because we still believe that Israel is, the place for the best cryptographer and the best security people. And, blockchain is basically built upon security consensus and, cryptography. And so we thought that, it's a great place because there's a lot of DNA and, a lot of talent and also a lot of capital. And the other thing we need to fix is maybe regulation here in order to really become like one of the best ecosystem. And so, the more we progress, we have this thesis and we kind of get deeper into the thesis. So that's basically, we're at.
And so let's get into the founder ecosystem here and also abroad, right? So how does the founder approach you, Adam and Collider, and what is the process that you generally say, okay, this got my attention, I want to pay attention to this founder? Do you guys actively seek out projects that that are starting up and you want to tag along with other investors or reach out directly to founders and say, I'm interested in what you're building? Or is it more of the requests that you're getting and you're siphoning through them and filtering out, okay, we're getting a lot of requests. Let's see if some of these are valid. What is your approach to finding good investments in Web3?
So our approach is just to build the best network and be known. And so people just, approach us and forward us the opportunities. And also we source a lot. We have, like cold emailing, we reach out to entrepreneur, we meet them at conferences, we see them at hackathons, and we just reach out and say, hey, what you're building is interesting, let's talk. We just create this big pipeline of product or founders we're building. And then we figure out, which one are interesting. And usually we have different area, as different founders that we like, right? We really need to be passionate about what we want to invest in. And so, some people here will be investing in governance, and some other will be investing in stable coins and payments, and some other will invest in, cryptography, like MPC and zero-knowledge proof and fully immutable encryption. So we try to spread those investments across different categories because we do believe diversification is super important. And so we're basically a generalist in crypto, but a specialist fund because we do invest only in crypto.
Mm-hmm.
The second thing is we always want to lead and we be the first investor when it comes to Israeli entrepreneurs. We will never tell an investor, hey, we'll just wait and see if someone else will invest and then we might put a ticket. We want to get to a point. And again, if you say that to someone at some point, then the right way to read that was to, hey, we don't have enough conviction to invest in you. And so we defer to someone else, but basically it means that, hey, we're not sure we're going to invest in you because we don't have conviction in something, in what you're building, the market, or anything else. And we try to be very transparent about it. I mean, most of the time, I usually tell founders, when I tell you no, or maybe, or let's meet again, as long as I never told you yes and here's a term sheet, it's a no. And you have to treat this as a no. A no can become a yes, always. But treat this as a no because it means that you need to either invest more time with us or you need to invest somewhere else. But, we need to set expectation. And we try to come back to the founder very fast and say, this is not for us. and we're not going to invest, because sometimes you really need to be very articulate about this, because, founders think that you may like them in a way. When it comes to project outside of Israel, we tag along with other investors. We don't have the ability to do deep DD into the founder. We don't know them. We don't know the network they go in. And so we try to find someone that we trust. And we have a couple of funds that we co-invest with all the time. And when they invest, we look at that. And if it basically matches the investment thesis that we have, then we'll do some additional DD, and then we'll invest usually smaller checks. And then we tag along with whatever terms the investor picked. And we always tell people, look, we never lead, or we try not to lead an investor that is outside of Israel. So that's pretty much how we approach things, and we fight a lot. We understand that we're in a position that sometimes we can invest in founders because we're the first pick, but we never take this for granted. And sometimes we know that other people would put a term sheet, because we're not only competing with Israeli funds that may put a term sheet, we also compete with non-Israeli funds. And so we fight, we try to get to most entrepreneurs as early as possible. If you don't, then when we get later, we try to do a lot of work in order to impress the founders, because they have the options to take money from someone else. I mean, there's an investment that I fought to get, and we had another very prominent tier one fund that was looking at that investment as well. We knew there was a tier one. We didn't know that there was this tier one. I knew that even though I knew the founders and I knew, and we had a good relationship, and etc., I said, I'm not going to leave that to a chance that maybe they'll give him better terms, or they'll tell him, hey, we want to take the whole round and, and squeeze out everyone else. And actually they tried. I flew to another country to basically intercept the other founders who was not Israeli. I mean, he's Israeli, but not living in Israel. He was going to a conference, and so I intercepted him into a country. I asked him to take a stop, and I told him I'm coming for, 48 hours. I want to meet you from the morning to the night. I want to take you out to dinner. I want to talk to you about everything. We don't know each other. I know the other founders. And then after you get to know me, then you'll make a decision if you want to take money from us. That was very important for me to fly and basically show the founder that we're going to do whatever it takes to win this deal, because we also want to project to you that we're going to do whatever it takes to make you win. I'm not, I mean, we're supporting the founders, and the founders, they do like 99.99% of the job, right? We don't have any impact sometime on the founders. We're there to help with whatever they need, and sometimes we don't help because they don't need our help. Okay, we're not the one that will try to help no matter what, but we're hungry and we're coming to a fight with the best guns, and that's super important to me, at least personally.
So how do you recognize, or how do you find the founders and the projects and the ideas that are worth traveling for 48 hours to meet the founders, spend the day with them, to offer them a term sheet? What is the stark difference between a project and founders that you say, yes, I'm flying over there, I'm meeting the founder, and I want us to land that deal, versus probably 90 or more % of the founders that you meet with and say, okay, we're going to take a look at it. Let's see if we offer a phaser. We'll talk it with the team, and then discuss.
I think the most important factor in any project is other people, nothing else. And the more we know the people, the more conviction we have, or we don't have, but the less unknown we have. So usually I like to meet founders very early, even when they don't have a product. I tell them, look, let's get to meet, and, whenever you get to raise money, then we can talk. But it's important that we get to meet several times, and we know each other. But it's a very long relationship. It's like a marriage. It's maybe the second most important relationship after your founder itself, your co-founder. And there's this investor called Mark Schuster, named Mark Schuster, who wrote once a blog post, which I think is one of the most important blog posts for founders to understand how VC think. He basically wrote that he's investing in lines and not dots. The concept of dots is basically every time I have an interaction with you as a founder, you're a dot. You're a point of data. And I may meet you for a year, You may be working on something else. You may be working at a company. You may be working on this product. Maybe that product doesn't get traction for 2 years. But all it takes is that I get to meet you several times. And when that product gets traction, and we can move fast because I already know you. And then we can just see the market, the product, everything else, and see the data, and then it makes sense for us to invest. Because at the end of the day, you need to have a very good read on the founders, and the dynamics between the founders themselves, their knowledge and expertise. What do they know about the product or about the market, that no one else knows? What is this thing that they have that is contrarian that you might think might be right, but everyone else thinks they're wrong? Because then it makes even more sense to invest because the upside is crazy. And, a lot of time I don't know up until the very last moment if I'm going to invest. I mean, when I flew to win this deal, I was 80% convinced I'm going to invest. I mean, I end up sometime doing a lot of work and doing a lot of preparation and then deciding at the very last minute after I speak with my colleagues and other people and then references, okay, maybe I'm not going to invest because, we were looking at a lot of investment opportunity. And we need to make maybe 30 of them in a fund or 35. So it's really end up, it's just a matter of ticking the boxes. And one thing I keep telling, entrepreneurs that I meet, you want to get to a point where you pitch someone and they end up with only one question, like one thing that is kind of open-ended, like, okay, I'm not sure about this yet. When they have multiple open questions, then it becomes very hard for them to invest. When they only have one, then they can double click on that and do a lot of work. And some people would say, you know what, I'm going to take a risk on that thing because I have an assumption that's going to play out this way. And so I'm willing to take a risk on this. And obviously when you have several, then it's harder. So you really need to come prepared. You need to really have the ability to answer all the questions that may arise and really learn from the process because, there's a lot of questions that come up in the fundraising process. You really need to find out which one coming up again and again and again that you need to address with maybe a special slide and which one you need to have one in the appendix. And when you get asked that question, you can open the appendix and say, oh, I actually have that answer because, I've been asked before. And you really need to be able to say, I don't know when you don't know, but then come back very, very quickly because the communication style that you have as a founder is very important. If it takes you 1 week to get back about something and you're in a fundraising process, it tells me that either I'm not important to you, which is fine, or the fundraising process is not important to you, which is a problem if you're fundraising, or you're just slow. And we don't like slow. We like quick. And people will fail because it's better to be wrong a lot, but fixing the wrong very quickly than being right sometime, but only deploying that's right once every 2 or 3 weeks or whatever. You need to have a very quick iteration process.
Fast
because
iteration.
You need to go, build a product, get feedback the same day from your customer, and then get back. And usually, and by the way, Paul Graham said that you really want to build a product that people love, like very small amount of people are crazy about it, than just build a product that maybe a lot of people maybe like or whatever. You really need to build this fanatic community, small community, because then you can expand it, that are really hardcore loyal to what you're building, which is a lot what happened in crypto, than building something that people are indifferent. I mean, love and hate are basically two emotions that are very important. You don't want to be in between, which is indifferent. You want to be hated, which is sometimes good because it creates an emotion and people care enough to hate you or to not like what you're doing, but that they respond to you. Or you want to be loved. You don't want to be in a place where people are indifferent or don't care. Oh, yeah, I don't know. Oh, this guy, yeah, sure.
So one of those, Adam, can you, for our creator audience and the entrepreneurs in our community, what are those boxes other than the team? The team is first and foremost. Fast iteration, we learned that. Prepared, come back weekly, communicate openly, fail fast, iterate quickly. What are all those boxes that you discuss in closed door with your partners when deciding?
Yeah, so team is very important, dynamic between them, the ability to interact fast and build a product and that people love and want. And it's also something we look at. I mean, and again, that falls on the team itself, because the team need to understand that they're building something that people will be using. And so it's super important. The market is very important as well. I mean, you definitely want to make sure that you're building something into a market that is big enough. I mean, if you're building something that doesn't have enough scale, it could be a great business or it could be a great startup, maybe with an angel investor. But if you cannot get past a certain size, it's not fit for my model. My model is I'm raising 10 million. I'm going to invest in 30 companies. I need to return to my investor between 30 to 40 million or even more. And in order to do that, what I will do, because I know that my mortality rate of investment will probably be closer to 80 or 90%, there will be one or two companies that will return 100x on my investment and will return the whole fund. If I have two, amazing. If I have three, jackpot. But it's not an optimization. It's a power law problem where you basically do a lot of investment and the distribution of wealth usually only in one company or maybe two company, even kind of crazier than the Pareto rule, which is, 80% of the value comes from 20% of the investment. And the optimization is more in the hedge fund. It's okay if you buy something and you sell for like 3x or something, because you look at the investment pace. If you did X in 1 year and you can take the money and recycle it and do another 10x, then you essentially did 30x on the money, right? 3x and 10x. The VC model is that we take 10 million, we invest, we may recycle some of the money at some point, but at some point we cannot recycle anymore. And when we sell the company or we sell the token or whatever, we need to return money to our investors. We have one shot. So we have 31 shots that we need to be very careful. And so every time we make an investment, we ask ourselves, is this a huge company? I'm less worried, by the way, about making an investment in a company that may fail. I more asking myself, do I make an investment in a company that will succeed but will be too small? So I'm really okay making huge bet, contrarian bet, crazier bet into a company that will have a very high probability of failing, as long as if I capture one, I can return the fund several times. So that's how I view this in a way. Crypto allow me to optimize liquidity sometimes. So the liquidity is a feature, not a bug. So I can return money earlier to my investor through rewards or validation and stuff like that, or governance. Or sometimes even selling some token earlier in order to provide liquidity and basically hold the rest, 95%, 98%, for 5 or 6 years. And, hoping that one of them will become a Chainlink or Solana or Ethereum, whatever. And so team and communication and quick iteration, really strong focus on building the best product and, being like very obsessed about building the right product to the right people and knowing exactly what is product market fit or community market fit. The market obviously is important. Sometimes, and I tell that it's a caveat to what I just said, sometimes you invest in small market that are growing very fast. Okay. So when I started building WordPress in 2010, the open source market was very small. GitHub just got started. There was SourceForge. There were not a lot of open source, but I knew that open source was a movement that was very, very important to the world, to humanity, because everything we see around ourselves has been built upon open source and upon the shoulder of other giants. But I knew that at some point there's going to be a platform that will allow to build this and then also take this the commercial way. So I knew that at some point there would be more software built on open source than closed source. Closed source will be eradicated. This is what I was thinking. I was way too early. So timing is also important. But I knew that, when GitHub started, the amount of open source projects were doubling and tripling every year. And so if the market is small and you could take a leadership into the market because it's small and no one care about it, but you have this view that this market is going to become big because no one else see that. And that market is growing 3 times, 4 times every year and then becoming super big within 10 years. And you're already entrenched to that market. That's fine with me as well. So sometimes you also need to look at that, this angle. Big market and not, I prefer investing in a small market and growing super fast than a huge market that is not growing at all or shrinking.
Right, of course.
So there, I think that there's a lot of other stuff that we take into consideration, technology and et cetera. But one thing in crypto that we also look at, if you are going to launch a token, you also need to be able to manage the token and manage the community. You need to be the kind of leader that is completely different from, there are great CEO who are great at managing private companies, but they're not great communicator and they're not great, they don't know how to manage like a public company. It's a different skill set.
Yes.
So, you look at Solana, there's Toli, right? Anatoly. You look at Ethereum, there's Vitalik. You look at Bitcoin, there's Satoshi. I mean, it doesn't have to be a person or a living person. It could be sometimes just a myth, right? We don't know who is or who are Satoshi, right? And every single project has this leadership or this person with, Binance at CD, right? Up until not so long ago. So you really need to also understand, you need to understand that person you're talking to. If they're pitching you that they're going to build this huge network, a project, and with a huge community, you need to look at them and ask yourself, is this the leader who's going to inspire confidence in, hundreds of thousands of people? Does he communicate well? Does he communicate well with that community? Can he build the right incentive? Can he, not just build a good product? Because again, the product is the community, the moat is the community. So you also need to invest in people who can do that. And it's always, it always has to be the founder.
Yes.
It cannot be someone you hire to do communication or investor relationship, whatever. It has to be you. If you're building this and you're passionate about it and you're not going to be, you're basically going to work, 24/7 to build the best community and the best product. It has to be you because no one else will have the conviction and the mean to go through the ups and downs of startup building, which are even enhanced and crazier in crypto because you also have the price that could also take you even higher in the roller coaster and lower in the roller coaster. So you really need to know how to manage your psychology. And I think only a founder can manage well, psychology and stick around for a very long time.
Yes. Adam, one last question. This is the last episode of the Web3 Creators Podcast of 2024. Now, looking forward, what is your vision? What are your predictions for 2025? What do you think are the largest narratives that are maybe being ignored or that are you most excited about? I know I'm hearing a lot of this AI agents, tokens, of course, meme coins have exploded. There's a DeFi which cannot be ignored, but at the same time hasn't picked up yet. There's gaming, real world assets. There's so much going on. What would you say is something that crypto people and Web3 people need to pay attention coming into 2025?
It's a very tough question because it asks me to think like short term or mid term because I really try to think like decades, like 5 years from now and 10 years from now, as opposed to what's going to happen in 2025.
At least I didn't ask you give us a ticker,
Yeah. So it's really hard and I'm not very good at it. I try to be open and always learn from other people and try to see, what's happening and see the trend as they're getting formed. But, sometimes I miss them very early. But, as long as I see a general direction, I invest into the direction. I get to know the founders and I get to know the industry and those different narratives is really fine. But, I would say that AI is very important because, and I've seen, and by the way, I've said that for the last 3 years. I remember I had a slide that I basically had in my presentation to my second fund, and I pitched the LP and I told them there was a tweet somewhere that I read and it was like, okay, this is huge. That tweet basically said something very simple. An AI agent cannot have a bank account because it cannot be KYC'd, but it can have a wallet. And then that moment I said, okay, that makes sense. I think that AI will accelerate the adoption of crypto because this is the only way to make AI truly autonomous in transaction and even in prioritizing interaction. Because if you don't prioritize interaction with money or with some sort of utility token something, then that AI can basically do a lot and not be very effective. For example, you pay for ChatGPT with tokens. And the more you use it or the more you use the model that are more sophisticated, you need to pay more. And so this is the only way to really like prioritize and reduce the spam, etc., etc. But on the other end, there's a lot of deep fake today and a lot of fake news and a lot of stuff that is being generated. I mean, there's going to be a lot of noise in that next decade because AI allow you to create a lot of that stuff. And the only way to really know the provenance of something is to have crypto, and that crypto need to be on a blockchain. And so if I get to see a video in 10 years of someone telling me something, I want to be able to track the provenance of that person. That person would have an identity, and I'll be able, I actually see Trump, pitching saying something, but I know it's him because it's been in by him cryptographically. This is the only way to really have like a good provenance. So AI would be very important, but at the same time, I do believe that if you want to make wave into regulation and create like this on-chain economy for everything, we also need to invest more in privacy, which I think we tried to in the past with ZKP and other stuff and TE and stuff like that, but it's not true privacy. And so one thing that I look a lot, and we've invested in a company that does something in that space, is basically FHE. It's a true holy grail of cryptography. It allows you to encrypt end-to-end anything. So I'm a user, I encrypt something and then I'll send it to you. But then you can make operations on top of that. So you can change the data without knowing what's the data inside. TP allow you to look at a proof and basically ask a question and say, is this right? Is this wrong or right? Okay. With FHE, you can also change the information within the encapsulated, encrypted data. And then the person who's going to decrypt it later on will see the changes, etc. And so I do believe that if we're going to have everything on chain, we will need to provide some very basic and true, encryption. And to me,
so the big mystery was when CK proofs went out, it was how can I tell that something is true without actually looking at the content of that data? And now what you're saying is you not only can acknowledge if something is true or not, you can actually process the data and modify the data and make some modifications without knowing what the data is.
Yeah. How do you trade? How do you subtract a balance? Let's say you have a decrypted balance. Okay. How do you subtract $2,000 from a balance that is still encrypted? How do you make transactions that are completely encrypted if MBV is encrypted? Okay. So the mempool is encrypted. Sorry. So I think the FHE is probably one way to go at it. It's still very early. It's going to take a couple of years to get to production, but it's starting to be very efficient, more efficient than it was, a couple of years ago. He is great at what they're doing. And so I think at the end of the day, we're going to have to use both TKP and FHE together. There's another way to do, encryption with, trusted execution. So T, but I'm not too fond of having to trust a chip or having to trust an enclave that could potentially be side-loaded and also, kind of attacked. And so we've seen that in the past. So again, there's different ways to do it. By the way, Israel is great at multi-party computation, MPC and ZKP and FHE and all those primitive, and they're like the building block of crypto, right? And this is really where I see Israel thriving with building, with the likes of companies like Fablox and Starkware and Phoenix and many others.
Yeah, that's amazing. Adam, where can people find more about Collider, about you, follow you, know what you guys are up to? What are your investments? How's your portfolio looking? We didn't even get into,
Yeah. So best way to reach out is just to order at me on Twitter. So, I'll give you my username, but it's Adam BN. And it just can order at me, and they can also find me on Farcaster. They can try to send me an email, which is adam@collider.vc. Or you can just go to our website. Or they can just reach out to you and ask you for a warm introduction, because I usually like warm introduction, more than a cold introduction.
Of course. Adam, I want to thank you so much for taking the time, being on the podcast, giving us so much insights for founders and builders on, what to look at and how to make sure that our projects and our startups are more VC friendly, and they're also more investable as well in general. So that it's been an amazing time as usual talking to you. I want to thank you so much, and wish you the best for not only Hanukkah, which is what we're celebrating here in Israel, but also for a very successful 2025 and moving forward.
Thank you. Yeah, thank you. Thank you for inviting me and giving me this platform. It's great. I mean, I always like to speak, on the podcast and getting this kind of a platform to kind of reach a wider audience. I always like to speak to you anyway. So, thank you for inviting me, and let's do another episode at the end of the 2025 and find out how 2025 was.
At the end, we're gonna do a part 2 on this somewhere around. We'll find the time, I'm sure.
Awesome. Thank you.
Thank you very much. See you soon.
Thank you for listening to this episode of the Web3 Creators Podcast. Make sure you follow us on YouTube, Apple, Spotify, and all of your favorite platforms. And if you're serious about building your own Web3 business, head over to web3creatordojo.com and check out our courses. That's web3creatordojo.com. See you soon, creators.